some big AI stocks also seeing outsized drops recently. Names that you know, maybe you own or trade: Palantir, Oracle, NVIDIA, and Broadcom. Today, short week, low volume, no Fed speakers, but still down today. We're going to get more on technology a bit later on this hour, but let's start, Guy Adami, with these metals. What I referenced was a raising of margin requirements on silver by the Chicago Mercantile Exchange. Some people pointing to that and saying that's the reason. What do you think happened today?
Welcome.
Thank you.
Be here all week.
All week, not Thursday. Happy New Year.
Happy New Year. That's one of the reasons, definitely. I mean, people should have seen that coming because historically, when you see prices move of that magnitude to the upside, you will see margin requirements be raised by these exchanges. By the way, it wasn't just silver. That was part of it. Another part of it was there were a lot of $75 calls in silver that were exorcised on Friday. People that were short those calls needed to cover. That took the price to 82, and that creates something called, in our world, negative whip or bad Greek. I think that was part of it as well. And this was just, in terms of technically, you had basically in one of these reversal days where you had a higher high than the previous day, a lower low than the prior days, and you closed lower. So technically you have this engulfing pattern. It all lined up on Friday into the weekend. Now, the next question is it over? In terms of the selling, I don't think so. But the real question is the move higher over? And I don't think by any stretch of the imagination it is. I think this is just a pause to a larger move higher.
That's it. Steve Grasser, you know, the bulls that have been out there in gold and silver, they looked at today and said, you know what, now I can get it for 9% cheaper than I could get it yesterday if it keeps going higher. What do you think?
If you look at these, the biggest up days, the 10 to 25 biggest up days historically are followed with a 20% drawdown. So you're going to have some time. You're going to be able to get it cheaper. These things have run so far so fast. I still believe upside is still there.
Yeah, I mean, I tend to agree, although I'm with you, closer to the 20% drawdown rather than looking to get in right away. If you're going to play it, you will likely want to do it in a risk-defined way. But I do have some concerns when I start to see silver and gold have moves like AI complex names. I mean, that is somewhat concerning. I think anytime you start to see an increase in margin, whether it be on the downside or the upside, it is somewhat indicative of things getting like away from their. We argued about fundamentals or whether or not there is a fundamental case to be made a bit on Friday. But when you start to see these outsized moves,
what happens if the silver move is based on what you just said, the AI move? Because obviously it has a use case in industrial. I'm sorry to take you off your train, but continue on that path when silver has the industrial use.
I do think that it is somewhat a tertiary way of playing the AI market. Like we've seen AI, we've seen data centers, we've seen the chips, we've now seen utilities, and now we've seen that follow through into silver. I do think it does have something to do with that. But all of that said, you are starting to see, even though you have seen somewhat of a bleed off in some of these AI names, the day-to-day volatility that we're seeing in silver is somewhat. It reminds me somewhat of what we've seen previously in some of the snowflakes or the cloud flares, et cetera, in that space. And I think that type of price action is concerning. And I would wait for that volatility to die down before I would be looking to reestablish.
Because